Hi everyone, hope you're all doing well, and today we're going to talk about some of the stocks that dipped yesterday. I had a few of you guys in the comments yesterday saying, can I talk about this stock that's dipped? So we'll be covering a few of them, and also we'll talk about earnings because it was a busy day on the earnings front. We had Huya report earnings, we had Gold Nugget report earnings. We kind of knew what they were going to do because they did preliminary earnings, but there was still some good information there, so we'll cover everything like that. So if you could smash the like button, hopefully if some of you guys that had a few questions, hopefully that does help you out. So, yesterday, it was pretty chill, to be fair. It was pretty chill on the Nasdaq, and then it was just kind of like the last hour. The stock market just tanked. Well, the Nasdaq in particular. I think even the Russell was hit quite hard. And yeah, there's a few stocks that dipped, especially on the tech side of it. When the Nasdaq drops, maybe 1%. Some individual stocks drop, 2-3%, and that's you're kind of looking at them stocks that are dipping maybe a little bit more than Nasdaq, and like, okay, is this a buying opportunity? So yeah, that was definitely the thing that stood out at the moment. Now, obviously, you guys probably know exactly how this happens because I'm filming this currently at 6 a.m. So by the time this video goes up, the stock market will probably be maybe open roughly, but at the moment it is looking like it is a bit of a flat return. It looks like the futures at the moment, they aren't jumping that much. I mean, the Nasdaq's putting a little recovery in, but the S&P and Dow are pretty flat. So we'll see what exactly happens. I mean, hopefully, I always say, like, when you're on these sort of dips, you just want it to go lower and lower and lower because sure, it might sting your portfolio in the short term, but stocks going down in the short term means you make more money on them companies in the long term. So these are definitely the best opportunities. So I would not mind a few of these turning a little bit more red. Now, just before we go on to some individual stocks, if you do want to join my Patreon, make sure you join through the link in the description. We did a private live stream on there yesterday, which was nearly 40 minutes long. And also I did buy 3 companies yesterday. I might do a recap on the channel towards the end of the week, but if you do want to stay up to date when things are happening, make sure you join through the link in the Patreon through there. Like I say, there was a private live stream yesterday. I always try to put at least 2 exclusive videos on Patreon every week. So I think for the price, it's definitely something pretty good. So let's go through some individual stocks first. I thought speak about this one, Lordstown Motors, or as some people are calling it, Fraudstown Motors. This is crazy. Like, I'm just like at the sidelines, like just watching this one. Like, the stock has lost in a month over half its value, which is absolutely nuts. So as always, when a stock kind of dips like this, I always, no matter what the company is, I'm like, is this actually a good buying opportunity? But I know Lordstown quite well. I think this was quite a decent company, and then there was a few red flags going on, some fundamentals that were going on. I was like, oh, I don't like what's going on there. And the big one on Lordstown Motors was management. I saw what management was doing in Steve Burns, and I was like, this guy ain't doing the right things here. And my opinion totally changed on this one. But once again, I kind of looked back into the company thinking, is this a good time to go buy this company? And once again, I was like, the management still makes me massively nervous on what's going on with this company right now. So yeah, I still have no plans at all trying to buy this one. I'm just kind of sitting from the side and yeah, seeing what kind of goes on. Another one that I own, which is on a bit of a dip at the moment, Eli. So I've kind of stopped buying this one because it just went up so much. But in about 1 week, 2 weeks, the stock's gone down 12%, and it was $30 down to $26, which is kind of crazy. So yeah, I think these guys are going to merge with Top Golf. I think these guys have a really good future, and I see this being a $60 stock. And yeah, I think Callaway Golf at $26 is pretty amazing. That's one dip that we've had right there. Another one that a lot of you guys asked me about is Skills. Down 7%. It's come down a little bit, but this valuation, when this got to $40, I was like, this is pretty high. Because I think they're going to do 500 million in revenue. I think it is this year. The company's 9 billion, this is a lot better valuation. When we was at $40, that was nuts. So yeah, I think this is probably a bit down to more of a realistic value. I am considering averaging up on this one. I am currently up still, I think it's like 30%, so it would be quite a high average up if I was to do it. So it is something that I'm considering about. But yeah, I think that this was a healthy pullback because the valuation was just a little bit too much. And the funny thing is like, I always get messages all the time like, when this stock is like up here at like $40. I always get messages like, is it too late to buy skills? Should I buy skills? And like get FOMO'd. And then they buy it, and then like they buy crazy valuations on the stock on a crazy run. And then they're surprised when the stock goes down so much. Like, this is why you don't get FOMO. This is why, if you've missed the boat, just let it go. And then if it does come back, then there's your chance. And now we do get the chance where it does come back, like 45% of people are a little bit like, oh, I'm not sure if I want to buy it now. And they get scared because it's come down. And it's like, hold on, you were willing to FOMO at $40, but now it's back down at like $23. You're a bit unsure. Like, it's just a bit crazy. I mean, it's not everyone. I think quite a few people have got that strong mindset right now. That the dips are your friend, and those are the times you buy because that's when you make money. And yeah, I mean, if you were willing to like FOMO at $40, now that it's lost half its value, I mean, I'd be like, okay, I've got my chance. I'm going to take it. So that is one that I am kind of considering. So we'll see what exactly happens there. I haven't bought anything just yet. Now, GNOG is the one that reported earnings. It is currently down 5% after reporting earnings, which was nuts because these guys, their earnings was fantastic. I would go as far as to say GNOG probably pulled out a 10 out of 10 earnings. So we'll talk about them guys in a second. So yeah, I'm really surprised that one's down. But once again, this is why I'm not a fan of coming in bringing out preliminary earnings early, because when it comes to the actual earnings, they always go down every single time. And I don't know why they do it. It's like, we're showing off, our numbers are that good. Don't show off. Just show off when it comes to your earnings date. So yeah, we'll talk about that one in a second. And here, I think this one just went down because of the markets in general. I think it was just having a bit of a reality check. It had been on a good run though. Let's just have a look. I mean, this one here, that's just a crazy drop. And we had a nice jump, and then it's dropped back down. So for me, if Huya does go below $20, I will probably start buying this one, and we'll talk about their earnings as well very soon. But yeah, so let's jump across. Let's start off with Huya actually. Now we're talking about them. So EPS in line, misses on revenue. So the EPS side of it was absolutely brilliant. Once again, these guys, the profit on this company right now is getting better and better and better. And all I'm seeing at the moment is that 4p drop and the valuation drop. This was really good from Huya. Probably went under the radar a little bit. Revenue, now it did miss by 13 million, which isn't a crazy miss. It is a miss, but it's not crazy miss. But let's not forget, this company just pulled out 30% year over year. And also, when we look at the active users, 30% year over year. Like, the numbers that were actually put out by Huya were really impressive. Sure, it was a slight miss on the revenue, but the company's still growing at 30%. And this is where I saw someone actually mention this earlier. At what point do you say, okay, yeah, it was a miss, and it would have been good if they hit numbers, but Huya have a history of like missing estimates by like this much. And at what point do you say, okay, this is a bad company because it doesn't meet estimates? Or at what point do you go, okay, it might miss estimates, but this company is still growing at 30% year over year revenue, and the profit's growing absolutely huge on the company. And I thought that's such a good point. Like, sure, it's a weird way that we reflect on things in the stock market. Like, if it beats estimates, it's seen as a good stock. But let's not forget, it is a bit annoying how these guys just only missed estimates every time. But at what point do we go, it's a bad company? Because clearly it's not a bad company. The company's growing at 30% year over year revenue. The profit's growing absolutely huge. And I'm like, that's such a good point. Like, this company should probably, take if it hits or misses estimates, because that's such a bad way to look at a company. You look at this company, it gives you profit growth that's growing huge in a massive growing industry. And the revenue was phenomenal. It's a 30% revenue growth company at such a crazy valuation, And I thought overall the Huya earnings that we saw were pretty good once again. The big news in it, and I actually missed the early dip when it was happening because I was listening to the Huya conference call. So I actually missed that like last hour dip in the stock market yesterday. Conference call was pretty much what you would expect from Huya. The big thing that I kind of took away from it is that the 10-cent ties are getting tighter and tighter, linking up more and more, using like WeChat as another streaming platform, which don't get counted in the monthly active users, which is worth mentioning, using more and more 10 cents games, League of Legends having a lot of success, signing a 5-year deal to carry on supplying that content to Huya. So I can see like Tencent clearly are very strong in that partnership. One thing that is rumoured is this here. Tencent is said to need concessions to get approval for Huya's purchase of Douyu. So Tencent is obviously involved in both Huya and Douyu. This is the merger that's supposed to happen. Seems like it's still a little bit off, which is annoying because I've always said I think we need Douyu and Huya merger to happen for this stock to kick on. And this Huya on its own, even if the merger doesn't happen, will do very well. You only have to look. This is actually when the merger announcement started happening, and both will do very well without it. It just means that this here would be even better for Huya because you basically have 8% of control of the market. You're not battling for the content creators, and then that will give you more and more profitability. So I think this will happen. I think obviously it's annoying that China is starting to tighten down on this. But I think that Tencent will give something up to get this merger done because they're so heavily involved in it. Just makes sense. It just means that it is going to take, we were kind of hoping that we would have a date now. But yeah, it's just taking a little bit longer. And like I said, I think once this is done, this will be what Huya needs to carry on going up. So yeah, I am considering buying some more if it does go above $20 anyway. Let's talk about GNOG. So, some highlights. We pretty much knew a lot of this. I think the big thing is revenue. Really good revenue beat this year. Adjusted EBITDA, very impressive. Raising financial year 2021 revenue to 130 million to 145 million. I mean, I said on the video like a while ago, I think the previous guidance was like 100 million. I was like, nah, GNOG are going to smash that. And they have raised it, which is absolutely amazing. Market access agreements, so this is what gives them ability to move into new states. Gone from 6 states to 10 states. Going to cover 26% of the population. Really good. Looks like we are going to be in for a strong 2021. I'm just going to try to pick out some of the key slides here. It does mean that the thing is that when they are launching a few more of these states, it does mean that the profitability might get hit a little bit, so just be aware of that. But still, revenue should shoot up absolutely huge this year. Average revenue per user, look at the growth on that. 2020, really good revenue growth per user. So I thought I'd mention that one as well. Very strong from that side. If we take a look at here, this is the market access to 10 states. So we've got Michigan that's just gone live, Pennsylvania, and then all the other ones that we're kind of linked up with. And these states are in addition to New Jersey, Nevada, and Mississippi as well, and Louisiana. So yeah, 10 big states coming, going for a lot more of it compared to what we saw in the presentation. GNOG are going now more and more aggressive, which is really good. So yeah, we'll see how that one plays out this year going forward. And guidance. This is why I'm quite surprised that it dropped, because it brings guidance out and then it's gone down 5%. The guidance was really strong, like we said earlier. And if we look at the Michigan launch, so this is one of the new states, so obviously we'll see how these new states play a part in GNOG going forward. But at the moment, look at this Michigan launch for GNOG. This is compared to the New Jersey launch. Month 1, month 2, month 3. Insane. And just to put that into like perspective, you can see it took month 48 in New Jersey to get what they're doing right now in Michigan already in 3 months in, which is, yeah, Michigan launch going really, really well there as well. And I think they've only just started advertising as well, which is pretty good. And those were some of the key things in the Golden Nugget presentation. I've not listened to the earnings call just yet. I think the replay is out this morning at some point, so I'll probably catch that in a little bit. But yeah, from what I've seen, like guidance raise, earnings beat, new states opening up, Michigan launch going really well. I was very happy with this one. This was really good. This was for me a 10 out of 10 one at the moment. So yeah, really surprised it's dropping, but I guess that's the curse of bringing out preliminary earnings anyway. But you know, whatever. So yeah, that's the video for today, guys. Hopefully it covered a few things that a few of you guys were asking, and some earnings as well. And yeah, hope it was useful. If it was, smash the like button. If you're new and made it all the way to the end, maybe subscribe as well. That'd be absolutely amazing. And I'll see you in the next video.